Good morning, traders. This is Savage Peeps out here. I'll be here every day for a daily market outlook to see the potential trade that we can stake within this week. Now, let's start off with gold. Now, looking at the gold, let's quickly go to the daily time frame. Looking at gold, what we can see here is that it had a push into the downside that broke the swing structure. Remember, this are swing high, these are daily swing high, these are daily swing low. But looking at the 4-hour time frame, going to the 4-hour time frame, what we can see here, we had a push into the downside that caused a break of structure and also what broke the swing structure. Now, for myself, I trade. I'm gonna keep it very simple right here, right? This is the rules that I trade, right? Market structure, liquidity, PVD, which is simply the premium versus discount, the chalk, which is the market structure shift, and from there the SND is supply or demand, or which is basically liquidity. Now, looking at the 4-hour time frame, you see that this is the push into the downside that caused a break of structure and also broke the swing structure. But this is the impulse, and then where's liquidity? You have liquidity situated here. You have first liquidity here. Market took out this liquidity. It was just a reaction. You took out the second liquidity, and then we are seeing a slowdown in the market. Now, looking at let's go to the 1-hour time frame. Now, in the 1-hour time frame, obviously the pullback has already started, right? You had a push into the upside, you retrace, push to the upside, and again you had a little push up here that broke market structure. Now, from here, I'm looking for myself personally. I'll be looking for shorts if we break this black dotted line right here. Let me go to the 15-minute time frame for more clarity. Now, looking at a 15-minute time frame, see that this is the 50-minute structure, right? This is a 50-minute structure that took out liquidity, and also you chose to the 0.5 retracement, took out this internal liquidity, and then from there you saw a push to the upside. Market took out liquidity over here, and then from there the market pushed to the upside. For myself, for the first position, I didn't take the first position. Now, this second position, which is right here, after this push to the upside, we pull back, push to the upside, break market structure, and then from there I was happy to look for longs, right? From this liquidity point, I took the entry from that liquidity point. Market came, slammed down in, and then took me out at a loss, and that's it. For myself, I'm just gonna stay patient here and wait for next setup, right? Now, looking at the 1-hour time frame, after taking out this liquidity, we didn't see a shift. Like, if you see a shift, then that will then be our confirmation that okay, market is ready to push to the downside, and then we continue with our short position, a long position over there. But here we saw a push to the outside, market took out liquidity, made a push, pull back again, and then market is just consolidating, right? So myself, I'll wait on the gold to see what the market gives us. Now, let's go to the second point, which is EURUSD. Now, looking at EURUSD on a daily time frame. Looking at EURUSD in the daily time frame, we see that basically the market is into the downside, right? Market is facing swing high, swing low, swing high, swing low, and now we have basically created another swing high. Now, going to the 4-hour time frame. What we can see here, we are seeing a bearish order flow forming. We have a push to the downside, we took out liquidity, push to the downside, took out liquidity, push to the downside. Now, this is the current market structure, right? Swing high, swing low, took out liquidity before pushing to the downside, making it a strong high. For myself, this is the impulse into the downside, that which is market structure. Market structure is bearish. Where's liquidity? Liquidity is situated above this equal highs over here. Second liquidity is situated over here around the monthly opens. Now, we haven't taken out the liquidity yet. After a break of structure, we expect a pullback, and the pullback is obviously starting. You had a push to the upside, take out liquidity, market push to the upside, and then look at on the 1-hour time frame. On the 1-hour time frame, now we are trading towards the liquidity point, right? On the 1-hour time, we had a push to the outside. This is a whole impulse to the outside. right? That broke market structure. First liquidity, you have first liquidity here, you have second liquidity underneath this demand wire, you have the third liquidity, which is sitting over here. But looking at this, what the market did is we had a push to the downside. It took out this liquidity, tapped into this demand. After tapping into that demand, well, we saw the shift in structure, and then from there, I was happy to take loans from there. For myself, this is the current position that I'm running on my evaluation, my phase 2 evaluation phase on a prop firm. Yeah, so yeah, let's see how it goes for myself. Yeah, so the trade is running in profit. Yeah, so this trade right here is at break even. The first one is at break even. Now I have a precise entry over here. This after a push to the outside, breaking this structure on the 50-minute time frame, right? On the 15-minute time frame, I'm just doing the same thing over and over and over again, bro. Like this is a push to the outside. I broke market structure on the 15-minute time frame. We need this impulse, this liquidity here. From there, I'm happy. I want to take a precise entry from there, right? So yeah, I'm in the second position. The first position is at break even, and then I have this pending order right here, which is yeah. So yeah, we are currently running in about $43. I don't know if you guys can see. Yeah. So yeah, currently running that trade. Yeah. So let's see how it goes. I just lost a gold trade this morning, but I mean it's fine, right? So I have 2 profits accounts, so yeah. Let's see how it goes. So this is actually like a risk or a risky one because it's a counter trend trade. A counter trend trade, kind of low probability for myself, but I mean it looks good, and yeah, also have the probability. So yeah, let's see how it goes. Let's go to GPUSD. Now looking at GPUSD on the daily time frame, market is telling us that market is bullish. Yes, on the daily time frame, we had a push to the upside. Within this impulse, first liquidity, you have liquidity here. I took out all this liquidity, tap into the last liquidity hour, so that shift the structure. Right now, going to the 4 hour time frame, this is the impulse. That caused a shifting structure, right? And then you had a pullback and that push into that broke market structure. Looking at the 4 hour time frame. Yeah, that's about looking at the 4 hour time frame. The 4 hour time frame is telling us a whole different story, right? You had a push to the downside, that broke, that shift the structure, right? Shift the 4 hour structure, bullish to bearish, right? Now, after this push to the downside, market retraced to the 0.5 retracement, but didn't take out liquidity. And then when they push to the outside, liquidating this low right here. After liquidating this low, push to the outside, they grew too big, and then slam down again. That broke market structure. Now, this is the current market structure. Impulse into the downside, that broke market structure. Swing high, swing low, retrace to the 0.5 retracement. But the only my problem here is that we don't have liquidity within the impulse, right? You don't have liquidity in this overall impulse push into the downside, right? You don't have liquidity in the impulse, so making it a low probability for myself. Yeah, we have the retracements, which is currently ongoing. We had a push to the outside. Market took a liquidity over here and then push to the outside again. Yeah, we had this impulse to the outside. Market took a liquidity here. We have second liquidity here. Market took out the first one, give us a shifting structure, and from there we have this demand over here, market push from there. Now this demand is currently in control. So this demand is currently in control. So let's see how it plays out for myself. It's a low probability for myself, so not really something that I want to get my hands on or I want to invest my prop account on. Yeah. So yeah, I'll wait on GPUSD and see what happens. Now looking at guys, let's not complicate this. USD guys, this is position to the downside outside, right? Look at the 1 hour time frame. All I can see on the 1 hour time frame is you had a push to the outside, right? You had a push to the outside. You had a fake breakout over here. You had a push down, push up, a fake breakout. Market liquidated that fake breakout and a push to the outside. Automatically, this becomes a strong low. Now, this is the impulse current impulse the market make to the outside, swing high, swing low, swing high. First liquidity within the impulse, you have first liquidity here, second liquidity here. Market took out the first liquidity, made a push to the outside, right? Early buyers came into the market came and took them all out. For myself, the reason why I didn't enter this trade is because I was not seeing what I like. Well, we have a shift in structure here, which means this demand will be good long forever. For myself, it was not looking good for myself. I'd rather wait for this liquidity to get hit. Yeah, that's what it is. Market just started to this liquidity and then took out the early buyers and then pushed to the outside. For myself, there's nothing here that I can do. So this is the current supply that is in control, which the market is reacting from. This is the supply that is in control right now. Well, even though it's a weak supply, right? Because it's built descending highs, right? It's built with descending highs, which is the liquidity. Market took two boosts out before pushing to the downside. Or just take it out and just continue pushing to the upside. Fundamentally, the USD is strong and then the Canadian dollar is weak. Yeah, so let's see. This is not looking good. I'd rather wait for the market to go more development and then act. Now looking at the Australian dollar. I mean, if you look at it from the daily time frame, you see that we're in the outside, had a big push to the downside, right? But this is also looking a little bit because we have this trend line liquidity over here. This trend line liquidity over here. Take out, right, and then just push to the outside again. Wow. Looking at the 4-hour time frame, right? Looking at the 4-hour time frame. Looking at the 4-hour time frame, we saw that we had a push into the downside, that shift the market structure, the market structure from what bullish to bearish. And this is the impulse that caused the shifting structure. First liquidity within the impulse, we have liquidity. The market took out that liquidity, just to the 0.5 retracement. And then we saw the chart, this is the chart, this is this black line over here. So that going to the 1-hour time frame, after we see the chart, or the shifting structure, market structure shift. All you see here is you had to push that caused the shifting structure. You did this for first liquidity. You have first liquidity over here. You have first liquidity over here. Here you have second liquidity over here. You know, anytime you took out this liquidity, you see a reaction. Another one over here, you see a reaction. The third one, not really any reaction. Then the fourth one, which is the last of all liquidity. After the fourth liquidity got liquidated within the impulse, also reduced to the 0.5 retracement. Now we saw the push to the pullback. You had a push to the outside, pullback, push to the outside, break of structure, shifting structure. Now this is the impulse that caused the shifting structure. Now it's time for us to go for short, right? Now, but the problem here is that looking at the fundamental, you see that the Australian dollar is strong and then what? The New Zealand dollar is weak. Which is kind of fighting with our bias because what fundamentals are key and fundamentals are always going to move the market, right? So the Australian dollar is strong and then the New Zealand dollar is weak, which is making the trade a low probability for myself, right? And this is also just looking low probability. That's why I have to be more conservative, right? So on the 1-hour time frame, I'm still gonna be looking for confirmation. I can take this as a swing trade, but because of fundamentals, that's why I want to take the short-term steps, right? For myself, I'll be looking for confirmation by the shifting structure, which is, if I get a shifting structure, then I'll probably go for short. But if don't, then the market can just continue rolling out and then push to the outside. That's something that I'm looking for. AUDNZD, right? So AUDNZD is gonna be one of the pair that I'll be much focused on. Looking at the pound AUD is the GPAUD, right? GPAUD. Now looking at GPAUD from the daily time frame. Looking at GPAUD at the daily time frame, we had a push to the downside, right? That broke market structure. Where's liquidity within the impulse? We have first liquidity here. it took out this liquidity. Yeah, we saw a reaction, right? Without taking out the liquidity, saw reaction. We have the second liquidity right here, which market took out, and we are seeing a kind of a slowdown in the market, right? Now going to the forward time frame. We saw that the pullback started. This is a pullback over there. Had a push to the outside. That broke. That shift the structure, right? Meaning the market is ready for the retracement, right? That a push to the outside. Market took out this liquidity. Start taking out liquidity. Market push up, and then from here as well took out some 1 hour liquidity. And market push to the outside, right? Yeah, so you took out daily some 1 hour liquidity over here. Market push to the outside. Now this is a current market structure. Swing low, swing high. We have the 0.5 retracement. What's liquidity within the inbox? We have liquidity, first liquidity. Market tap into that liquidity. And we saw reaction. Yeah, market days really push up. I didn't give us any bullish confirmation. Right now, I'm waiting for this liquidity to get hit before I'll take any action. And then, current price action, is consolidating for myself. No, it's not something that I want to risk my profit account on. I rather stay patient and wait for the liquidity to get hit, and then from there, if I see the confirmation, then I'll take a bias. I'll take a long. But the problem here is also that the fundamentals, the pound is weak. The pound is relatively weak, and what the Australian dollar is strong, which basically means you should be seeing the downside. GP80 should be bearish, but the technical is from the higher time frame. The technical is bearish, but on the forward time frame is bearish. Is bullish. Sorry, excuse me. On the forward time frame is bullish, right? See, so kind of like so maybe I'll wait for this black line to get taken out, breaking the candle close, and then from there I'll be looking for short position, which is gonna be high match probability. Why? Because you have the fundamentals aligned with the technicals. So that's it, guys. Thank you for watching. Thank you for your support. I'll be here video for a daily market outlook. See you in my next video tomorrow. And guys, like and subscribe to this video if this video help you, or you find this video helpful in any way. So like and subscribe. And if you want me to do a daily market outlook on any pair for you, if you like me to do a daily pair for you or a daily analysis for you, then you can put it in the comment section, right? And thank you for watching my video, and like and subscribe. Peace. See you in my next video, guys. Peace.